Hi, I'm Jimmy. In this video, we're looking at Intel, ticker symbol INTC. Our goal with this video is to better understand the basics of Intel's business, look at some of their recent news, which hasn't been too good lately, and then try to see if we can come up with a fair value for Intel stock. And hopefully we can use this information to help improve our investment portfolio and get us closer to our goal of achieving financial freedom. Okay, so let's jump in and see if Intel would make a good addition to our portfolio. So this is a chart of Intel's revenue going back to 2014. And as we can see, revenue has done a decent job of drifting higher. And that's at least partially due to the fact that some of their different segments have seen pretty good growth. Specifically, over the past 2 years, in the past 2 years, we saw a jump in the client computing group, their data center group, as well as their Internet of Things group, which really they just started reporting on back in 2018. Either way, these three segments have been some of the main drivers to the growth of almost $72 billion in 2019. Okay, now let's look quickly at what happened on Intel's most recent earnings report, which caused Intel stock to take a quick nosedive. So here's what Intel stock looked like. This is a 1-year chart. And clearly, in this area here, this is when the whole stock market fell from the coronavirus. But this most recent drop here, this is the result of Intel's most recent earnings report. So here's what happened. First, if we were to look at revenue from the second quarter of 2020, this is what their numbers came out to be. They came out to be about $19.7 billion in revenue, and that was better than the $18.5 billion or so that they were estimating. So they beat revenue estimates, and that's a good thing. And then when we look over at the earnings per share side of this, we can see that Intel reported earnings per share of $1.23, while estimates had them coming in at about $1.12. So once again, they beat on the profit side. So if we looked at nothing but their actual numbers, it might seem that things are going pretty well for Intel. But as we know, Intel's stock recently tanked. And the reason for the pullback in their stock is because on this same announcement, it was actually in the earnings call, Intel announced that they're going to be delaying the release of their 7nm products. And this was a big deal because many investors and even customers have been expecting for that product to be done sooner than later. This isn't their first pushback with it either. This is another delay. And the reason for this delay is operational mistakes. Now, Intel hasn't come straight out and said that. They haven't said exactly why the 7nm chips are being delayed, other than it was operational. And they were having some issues with, there were some failures, I think, in different parts of them. So obviously, this is a problem because operational stumbling is the last thing you want any company to run into, especially when their competitor, AMD, already has 7nm products out on the market. So the fact that they're already out and Intel's pushing theirs off until, I believe, 2022, that's going to be a problem. Now, I do want to point out that some of this between Intel and AMD is simply marketing position. Yes, AMD has a 7nm component out there, but from what I understand, their 7nm product is about the same densities as Intel's 10nm product. And that's really the difference between 7nm or 10 or 14. With different nanometers, you get different densities. You get, with lower nanometers, they would deliver, in theory, they'd be more compressed. It would cost less power. They'd be more energy efficient. So they're supposed to get better and better and better as generations go on. But 7nm, where it used to mean something technically, it means less now. Now a lot of it's marketing, but still, Intel doesn't have their 10nm product on the market yet. So even if it's the same as AMD 7, AMD 7 is already on the market. So we may ask, why is Intel struggling so much? Intel's true advantage is also their weakness. So Intel generally designs and manufactures all of their own products. So while AMD is outsourcing their manufacturing to Taiwan Semiconductor, Intel is trying to create their own. So the disadvantage of them creating their own is exactly what they're going through right now. They're going to run into issues, and because of that, their stock is going to struggle. But in theory, the advantage of Intel doing their own research and designing their own product and then creating the machines to build them and then creating their own products at the end of the day, is in theory they should end up with better margins. And I was curious if this was in fact true, so I went down and pulled up gross profit margins for both Intel and AMD. And as we could see, Intel does in fact lead the way. Now I do think it's important to point out that AMD's gross profit margins are improving, and we should keep an eye on this over the coming years because I'm very curious to see if their profit margins do catch up to Intel. But either way, Intel is looking fairly good from a margin perspective. And then when we switch over to net income margins, well, here we can see that Intel's net income margins are really what separate the company. It's one of the appealing parts to Intel. And I think this is a good illustration of Intel's competitive advantage. But this brings us back to the same problem. The competitive advantage is only as good as long as Intel can effectively create and manufacture their products. And their 7 nanometer product or their 10 nanometer product coming in a year after AMD is already out in the market, well, that's simply not going to cut it. Okay, now there has been some talk of Intel using a third party, sort of like Taiwan Semiconductor, to help manufacture that. And that could help them get back on track, but it's also possible that if they do that, it hurts their competitive advantage as well. And that will probably hurt their margins. So perhaps they do it just temporarily to try to get back on track and move things along at a slightly faster pace. I've also read that they've moved around some personnel within these divisions to try to restructure the organization and to try to get a bit more accountability for the higher ups in the business. So I think at the end of the day, this will be a good thing for them. So this brings us to the question, is Intel a good investment today? Well, the first question we need to ask ourselves is, do we think that they can clean up their operational issues? If the answer is no, well then our answer is no, we shouldn't invest in Intel. If we don't think they can clean up their operations, let's go look at AMD instead. That could be way more interesting. But if we think that they can do it, then it might make sense for us to try to come up with a fair value for Intel stock using the updated, newly delayed production numbers. And for that, we shift over to our discounted free cash flow calculation. Now, I'm not gonna walk through how the formula actually works. I did a whole video on how to do this. I created an Excel template. That's what this is. If you're curious, I'll leave a link to that video in the description below. But for now, I'll just run through the basics of what we're using here. So first, we've got projections for free cash flow that I found from a few different analyst reports who just averaged them up. We then discount that by a required rate of return of 7.5%. We used a perpetual growth rate of 2.5%. And basically that rate is how fast do we think Intel can grow free cash flow forever. 2.5% is about reasonable. That's about the long-term growth of the overall economy. That gives us the total company value. We take that, we divide it by the shares outstanding, and just like that, we get a fair value for Intel stock of about $92 per share. Now, sometimes if a company has a ton of debt, it makes sense for us to account for that debt as well. And I'm actually not going to do that in this situation because although Intel does have about $38 billion in debt, that's not a ton relative to the $72 billion in revenue they're bringing in. Plus, they have about $12 billion in cash and another $17 billion in short-term investments. So I don't think there's really any need to account for the debt. But if you're curious, well, the fair value would have come out to be about $88 per share after accounting for debt. Technically, that's the fair value of the equity, so that's probably a cleaner number to use. But let's say we want to take the middle of that. We'll say, okay, the fair value for Intel stock is about $90 per share. Right now, Intel is trading at about $50 a share. So that's about 80% upside if these numbers are anywhere near accurate. Another advantage of Intel is that they've been consistently paying a dividend for many, many years. And there's no reason to think that this is going to stop. Right now, their dividend yield is just short of 3%. So that could help sweeten the pot a little bit if we are interested in buying their stock while they clean up their operational struggles. And in the meantime, we can collect the dividend, and hopefully over the next few years, they fix some of their problems, or at least some of their problems. And if the stock gets anywhere near the estimated fair value that we came up with, well, that could be a very good thing for our portfolio. Now, personally, I don't own this one just yet, but this was a very interesting analysis, and this might be one of those that I'm adding in the near future. Since it looks like there's some tremendous upside and there's a huge margin of safety right now. If it's really worth $90 a share and we bought it now, that's an enormous margin of safety. Now, discounted cash flow isn't the only way to value a stock. In fact, in my last video, I went through some of the popular ways to value stocks based on the type of stock it is, type of industry it's in, things along those lines. So if you're curious, if you're looking for other ways to value stocks besides this, perhaps that could be a good next video for you to watch. I got a link right here. I'll leave another link in the description below. And I want to thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you, and I'll see you in the next video.